Hello there and welcome to yet another video from Precision Trading Mentors, part of Generational Wealth Academy. Now, what I am going to be sharing with you is what I consider one of the important areas you need to consider even at the outset of your Forex trading journey. Even on today's video, we are basically going to be looking at the base and quote currencies, the bid and the ask, and of course the spreads and commission. Now, going back to our chart here, we have a chart for the pound New Zealand dollar, which basically is for those who want to trade the pound against the New Zealand dollar. This is the chart you would open up to. At the top right hand corner there, we have the market price, the current market price. You can see it's fluctuating, and here it currently shows 0.0. That is the pip counter. So because we're not in a trade yet, it will show 0.0. But once we get in a trade, which we are going to be doing, during the course of this, tutorial, we're going to see the price begin to move. Okay. So what I want us to start with is, what every trader would do if you're looking to enter a trade. That is obviously having done your analysis of the price movement. I'm sure you can see, even as that price, as these candles move, what we have here are the green and the red candles. If you do not know what they are called, even as they move in price, you can see the actual price movement there. Having done your analysis and you've determined whether the price is going up or down, you would then obviously go to the button here which says new order. You click on that and it brings up this box, where you're going to be either choosing to buy, to enter the trade by buying or selling the currency, one currency against another. I'll take this off now and even begin to show you a few more things. Now, some of the things I'm going to be showing you today might be new to you, if you are new to trading, or perhaps even if you have been trading for some time, because I know when I started, there were some things I did not know. I wasn't quite familiar with my trading platform, even as we have here, the MT4, but obviously with time, I would say I have, mastered it. Okay, so I brought up the box a while ago, this box, and I want us to bring up something else, and that obviously is the one-click button. Let's take it back off, and let's, take that off. So the one-click button obviously is good, for speed of entry. So especially for those who scalp, those who want to be in and out of a trade very quickly, they would usually use the one-click button. They'll bring that up. Let's take it off. Another way of bringing that up is to right-click on anywhere on the chart here. If you right-click here like so, you can then look for the one-click button, and you see on the top left-hand corner, it will come up. There we go. So you can see it has brought that button up, and if you wanted to take it off, can basically click on it again and it goes off. But let's bring it back on for the purpose of this teaching. Like I say, another way you could actually take this off is to click at the little white triangle there. You have to be careful you click on the little white triangle, because if you mistakenly click on the body of this box, you'll be entering a trade accidentally. So you can see here it says sell. If you're looking to sell this currency, a currency pair, you will click on the left. If you're looking to buy, you will click on the right. Okay, so let's now bring up the other box as we have it. Even as I explained a while ago, those who would normally use this one-click button are those who want to enter a trade quickly, as opposed to having to bring up this box. But you can see there are similarities even by looking at them. You can see the price currently here. This price on the right is the ask, what we refer to as the ask, and the one on the left is the bid. You can see there are similar figures here, except that the first 3 digits are smaller than the last 3 digits. But you can see all these digits are what is present here as well. For instance, currently, the bid, ends with 42. Well, okay, you can see it's changing. It ends with 39 here, and here it ends with 50. If you look here as well, you'll see they are exactly the same figure. So, you basically know, what price, at which price you are entering. Now, I did say this price on the right is known as the ask, and the one on the left is the bid. Same thing here. Going back to our text information here, what is the bid and what is the ask? Now, even as it says here, the bid is the price at which you sell the base currency, whereas the ask is the price at which you buy the base currency. I suppose you might now even be asking, what is the base currency and what is the base currency? Now, the base currency here, you can see this is a currency pair. This is the euro / or against the US dollar. So the first currency there, the euro, is referred to as the base currency, whereas the second currency is referred to as the quote or the quote currency, otherwise known as the counter currency. So when you're trading in Forex, you would always be trading one currency against the other. So here we have the euro USD. If you think the price of the euro is going up against the USD, you'll be buying the base. You'll be buying the euro USD, which basically means you are anticipating that the value of the euro is going up against the dollar, so you would buy. But if you think it is coming down, you'll be selling. So this, in a nutshell, is what you have as the difference between the base and the quote currencies. Like we said, the price you actually pay, for buying or selling is what we refer to as the bid and the ask. So let's go back to our chart here. So in what I was saying on the other screen is basically, if you anticipate that the price of one is going down against the other, you would sell. If you think it's going up, you would buy. Okay, having known that, let's take this off. Having known that, something else that is of vital importance is what is referred to as the spread. The spread. We will be coming to the commission soon. I mean, what these two basically are costs that you incur to your broker, because if you are entering a trade or a transaction, as the case may be, you would pay something to your broker. That's how they they generate their profits. Some brokers charge you both for the spread and the commission separately. There are others, on the other hand, who basically charge you, who basically make their profit based on just the spread alone or the commission alone. Now, the spread, even as it says here, is the difference between the bid and the ask. We looked at that a while ago. So the difference between the bid and the ask price is what you refer to as the spread. It is one of the costs you incur on each trade or transaction you enter into. And of course, another cost the broker charges you is known as the commission. So having known what the spread is, going back to the chart here, we can see here that the difference between the bid price and the ask is what we refer to as the spread. So I mean, obviously the numbers are changing very quickly, but if it was the case that one was here, you can see the difference is 13. I wish I could pause it, but you could see the difference between this number and that number is what we refer to as the spread. Okay, so at a particular time, like I said, I wish I could pause it, but here you can see it's 15. That basically held for us, and we could see that the difference was 15. Now, okay, I'm sure you get the picture. So, not to make this a very long video. I do want you to actually learn something quickly, because I want you to gain some insight today that is perhaps in a sense robust for you as a beginner. I am going to be showing you the chart for two currencies today. We are basically now on the pound New Zealand dollar. Another one I'm going to be looking at is the Euro USD, the Euro USD and the pound New Zealand dollar. You can see the spread here is huge, which basically means you are going to be paying a lot to your broker in a sense, because the spread is huge. Whereas if you go to a different currency pair like the Euro USD, which is the most traded currency pair, you see that the spread is only, well, it's basically less than 1. I know you can see it's basically almost zero. That is perhaps one of the reasons why it is the most traded currency, because in a sense you could say it costs you less to trade this particular currency pair as well as other major currency pairs, because in trading you have the major pairs and you have the minor pairs. Now let's quickly demonstrate something here. Let's go back to the pound against the New Zealand dollar. You can see the price is pushing up. I am currently in this trade. I'll be showing you that later on, as a matter of fact. So if we're going to enter this trade, if we anticipate, having done our analysis, that this price is going to keep on going up, it means we are going to buy. Now this is just for instruction purposes or education purposes. If I was going to buy this, I most likely would have waited for the price to come back down slightly. I won't buy here, but just for this purpose, let's click on this and it will take us into the trade automatically. Now when we click on this, like I said earlier on, you will see the pip counter here will begin to tell us how many pips we are in currently. So if we click on that, it will also show you what the pip spread is immediately. So clicking on that, you can see it says -14, which means the spread is -14. In a nutshell, what that means is that if you were to enter a trade on this particular currency pair, you are going to be starting off in deficit, because that is the spread, that is how the broker generates his profit. Now fine, because the price is going up in our desired direction, you can see the pip spread here begins to reduce. You can see it's moving very quickly. So as long as we get our analysis, we do our analysis right, and the price is going up, we will be in profit very quickly. But if the price goes against us, then obviously, this pip spread would increase in number, meaning that we have to first of all clear that -14, which we saw at the beginning, before we can go into profit. So let's now go to the other chart for Euro USD. The pip spread, on the other hand, here is very little, which means if we were to enter a trade, we would only need to clear just 1 pip, as it were, before we go into profit, which means we get into profit quicker. Now the price seems to be going down, so we're going to sell. With the other one, we bought, but with this one, because I believe the price is going to go down, we're going to sell. So let's click on that, and you can see here it's actually less than 1 pip. Isn't that smashing? It means that if we were to enter a trade, as long as this quickly goes in, as a matter of fact, we've started off in profit, because the price is dropping and going in our direction. A plus means we're in profit, a minus means we're in negative. So you can see exactly what I mean when I say, the pip spread does matter when you are trading in the Forex market. I did not know that when I started. I wish I knew that. Now let's go back to the pound New Zealand dollar. Obviously, for educational purposes, I am using a demo account. This is a demo account. Well, good enough, it has gone into profit now, but we had to clear a hurdle, as it were, of about 14 pips. Now, this is a demo account, like I said. Let's go to a live account, because I am actually in this trade. Okay, you can see I'm currently in my pip. I'm currently over 166 pips up on this trade, which obviously is good, because I did my analysis, I got it right, and I was able to ascertain that the price is going up. And what that obviously means, because the pip spread, as we saw earlier on, was about 14 pips, minus 14 pips, it means I had to clear a hurdle of about 14 pips even before going into profit. Now you can see I have already moved my stop loss, what we call the stop loss. That will be in a different video, a different tutorial. I have moved my stop loss in place to close in or lock in my profits. As a matter of fact, I will move in some more to lock in my profit, so that even if the trade now goes back against me, or if the price now drops, I will still close out in profit. May I even use this opportunity to say that is one of the benefits of trading in the Forex market. Regardless of whether the price of the dollar goes up or down, or the price of any currency, if you know where the price, if you are able to do your analysis right, and you are right in your analysis, you would make money. So whether the price is rising or falling, you would make money. Anyhow, that's it for this video. I hope you've gained a thing or two, and I would say feel free to log on to our website to get more to get more free videos, free tutorials, but more so join us on Telegram, even to receive some free mentorship. We do offer free mentorship, and of course, we give out trade ideas, on our Telegram group. I'll be leaving the link to the Telegram group on here. I'll be leaving it on here somewhere. And if you are watching it, perhaps on one of the social media channels, you can definitely, join us. Otherwise, visit our website where you can actually, watch more videos and find out some more things about our service. Okay, now, God bless.